this is Kevin Donahue, Senior Director with Protiviti, welcoming you to a new edition of Powerful Insights. Today's topic is digital maturity in finance, or more specifically, how more finance organizations are employing ERP systems, moving to cloud-based systems, going to analytics, and with that, understanding the talent and management and risk management needs that are required with these major changes. I had the pleasure of speaking with two Protiviti experts on this topic, directors Chelsea Black and Kizzy Gift. Kizzy is with the Business Performance Improvement practice at Protiviti. She specializes in finance transformation and change management within this solution. She works with global clients on finance and operational process improvement, project management, and change management. She has over 15 years of financial services knowledge as well as other industries including manufacturing, HR, healthcare, and insurance. Chelsea has spent the last 8 years in the Business Performance Improvement practice at Protiviti. She has more than 12 years of professional experience. She partners with clients to improve overall operations, focusing on organizational, process, and technology enhancements. She's a subject matter expert in shared services as well as project and change management in the finance transformation space. Chelsea, thanks for joining me today.
Hi, Kevin. Thanks for having me.
And Kizzy, great to speak with you. Thanks for joining us.
It's a pleasure. Happy to be here.
So let me toss out my first question. I want to start our discussion with the current landscape in terms of digital maturity, including automation in finance. Where do finance organizations stand today when it comes to automating manual processes and capitalizing on the capabilities of their ERP systems?
Good question. So one of the biggest trends I've seen this year, Kevin, is implementation of ERP systems. I mean, from Sage to NetSuite to Oracle, Workday, so many companies have reached out to us, all sizes across all the industries, which is, I feel like, the crazy part because it seemed as if COVID really pushed companies to take this leap, get the budget, start these projects in implementing new ERP systems. So that's been the biggest trend that I've seen in 2023. And coupled with Blackline, there's been a heavy focus on supporting systems like Blackline, and Blackline is a cloud-based system. And a lot of companies are finally switching to that cloud-based solution. You know, a few years ago, there was a lot of hesitation. You know, people were uncertain of whether cloud-based solutions were really going to provide that security. But you're now seeing that a lot of companies are implementing Blackline. And Blackline is really a system that sort of automates and streamlines the reconciliation process for financial close activities. So that's where it's at. That's what's trending. Blackline and ERP.
I would say, in addition to that, we're seeing companies take a deeper look at what their current workforce looks like. So in addition to ERP systems and the focus on implementations and upgrades, we're really seeing finance leaders challenge the ways of working today. They're taking a deeper dive at what their talent strategy is right now in their back office finance space. Do they have scalability? Does their current environment, both from an organizational and ERP standpoint, have the ability to transform their back office finance team into what the strategic vision of the company is? So usually when we say digital or digitization, we synonymously think of ERPs, but I think there's a greater focus that also goes back to what is the workforce? What's our talent pool look like today? So we're seeing an increased focus on that lens as well, which is beyond ERPs and what are our ways of working today? Do we have the right people in place?
You know, talent is such a huge topic today in any function, so it doesn't surprise me at all that finance organizations are looking at maybe a little bit of talent transformation in how they engage more of a digital mindset. So, Kizzy, let me ask you a little more about cloud-based accounting systems. We know they hold a lot of promise. What do you see as the advantages of these systems versus one that's on premises?
So I'll start by saying that the cloud-based solutions, they just offer organizations more flexibility overall versus having like your local server that's like on premise. So for example, if you need more space or bandwidth, the cloud can meet that need very quickly, almost instantaneously, instead of going through more a complex, time consuming, because you got to figure out the configurations, actually do the configurations, and those are sometimes costly upgrades to an IT infrastructure. Um, as companies are growing and scaling in an effort to meet global demands, this is a really important feature to be able to increase space and bandwidth, as well as cost-effective feature as well, because you only pay for what you use. So you don't have to have a big, bandwidth and you're not utilizing it. So that's one of the, cost benefits of using the cloud. It also just allows for better decision making and collaboration across the organization because there's mobility. Employees can access the data more effectively everywhere and collaborate on that data. And as I mentioned earlier, security was a concern. And I mean, it's always a major factor going both sides of pros and cons, but the cloud has shown consistently over the last few years that it is a pro. Many executives have concerns of how secure the data is on the cloud, especially at the beginning. It's often the number one concern, and arguably the cloud solutions full-time job is to consistently and continuously monitor security. So it's a lot safer than, in-house systems today. There are added security features like data encryption and disaster recovery that are just not, as easily included in some of those in-house systems. So I would say there are a lot of pros.
That's a great rundown. Thank you, Kizzy. Chelsea, I want to shift gears a little bit and talk a bit about reporting, or have you talk a little bit about reporting. That continues to increase as a priority for CFOs and finance leaders, with needs that go beyond financial reporting to include areas such as ESG and human capital. How are data analytics and reporting evolving to include areas such as human capital and ESG?
Yeah, I think that that's such a great topic to cover because, again, when we think basic data analytics or reporting, we typically think financials. How are our clients reporting month end, quarter end, year end numbers? But the reality is, leaders in that space are looking for more robust data points on what their current workforce looks like. So I touched a little bit about this earlier, but what is the talent pool? Over the last several years, and again, as a byproduct of COVID, leaders in finance are challenged with retaining and finding the right skill set of folks to support finance, back office finance spaces. So whether that's accounting roles or management or VP level positions. Right now, the talent pool is just proving to be lackluster, and organizations are really struggling on hiring folks to fill those positions. But how does that tie back to data analytics? Well, really, we're seeing the ask from our clients and from leaders on what are trends in the market? What are our attrition issues? Do I have an HR platform right now that gives me analytics on how am I able to retain folks? How long do folks stay at the business? What's our current turnover rate? Anything that they can use to support the numbers, especially on national or global clients, it really gives them visibility into where are our potential gaps or issues when it comes to human capital. That's a very big point that I often think is overlooked because they say, I don't know what's going on in my organization today. So it goes beyond the softer skills and it's more analytical. And what are my numbers? How are my people supporting transactions today? Another trend that we'll see related to human capital is, am I overstaffed? Am I understaffed? Tell me where we're seeing trends from my competitors or folks that play in the same space in our industry. Where do they stand from a human capital perspective? where do they staff up, or where are we missing or misaligning our resources to support the finance functions?
These are huge challenges I would expect for CFOs and finance leaders. And based on what you said, I'll point out that Protiviti has a great resource that provides data on some of these trends and insights in our Global Finance Trends Survey, in which we poll CFOs and finance leaders around the world. For my next question, I want to dive into the role of the role of the CFO and senior leadership in advancing the organization on the digital maturity scale. And I would imagine things like talent management, understanding your skills is going to play a big part in that. But I imagine the first step is establishing the right tone at the top.
I love this topic because it really lends itself to how our finance team is impacted by overall change management trends. So, tone at the top is absolutely critical. And finance leadership sending a strong and consistent message is something that's going to foster a culture that embraces a digital transformation. So, when you think typically, how are key messages rolled out to the organization, you're oftentimes going to be faced with different strategies and different goals. And that's not to say that leadership is misaligned within finance. It's saying that there hasn't been a consistent message developed. So, things that are critical that we're seeing is making sure that they're highlighting the benefits of whatever the digital finance transformation is. Take it back to an ERP implementation or an ERP upgrade. The messaging, regardless if you are in finance or IT, needs to be consistent to the folks that are being impacted. The second that there starts to be different messaging or room for interpretation is where folks start to fall off and buying into the idea of adoption. Another thing that we really encourage from a change management as it's related to digital strategy or digitization and finance changes is encouraging leadership to create an environment that it encourages their folks to be innovative and also go the experimental route to the extent that they can. So you're changing the way of working. The more that you introduce new technology, any new ERP changes, the more folks are saying, hey, I want to make sure I understand how my day-to-day is being impacted. The biggest piece of support that our leaders can do within this space is have consistent messaging and be an advocate for the change along the way.
Yeah, I'll definitely agree with what Chelsea just said. Change isn't always easy, as we know. Changing an ERP system is certainly not. It's not just a plug and play. It can change the way you function. It can change the way you process information. It will change the way your processes flow and the key activities and how you communicate internally within the organization and even externally with customers. So management really needs to empower change champions and process owners to drive that digital transformation. It's not just an IT-driven change. And that's one of the ways that management can set the tone on top, by empowering the business to have a seat at the table.
So, in the minds of the CFO and top management, what are they looking for in terms of governance and defining what success looks like? Or stated another way, what sort of reporting and or communications does the finance organization need to provide to these leaders on a regular basis?
So the C-suite wants to ensure that risk is being managed across the organization, any C-suite, that's for certain. They want to make sure that they're not exposed from a technology standpoint, financial compliance, or even an employee perspective, as some of the areas Chelsea went through earlier, employee retention and employee skill sets, knowing that they have the right talent. And success can look different for every organization, especially based on their strategic objectives and priorities. But what I've seen remain consistent for CFOs, it has been reporting. They want clean, quick, and accurate reporting to make decisions. That's really all they want. And they always say that even after they've implemented new systems, and it continues to be a priority for them. And a lot of these reporting and metrics are driven from KPIs that are tied to their goals and objectives. So, from that standpoint, that's how they manage risk. And that's why reporting remains one of the key, I would say, priorities for CFOs. Chelsea, is there anything you want to add?
No, I completely agree. I think you hit on the main points. I would say another thing that they're looking to drive is the formality of policies and procedures around data governance. So yes, absolutely. The data quality and the data governance processes are absolutely top of mind, but how are they formalizing that process and ensuring that, from a controls perspective, that stays in place within their organization? So it's really developing a formal policy procedure and making sure that it's adopted within the business that protects them at the C-suite level.
So, Kizzy, you mentioned risk management. I wanted to circle back to that point and have you provide maybe a little more color. Risk management is important when employing new digital tools and technologies. What are some of the risk-related considerations that come into play here?
Well, with any implementation, there are going to be risks, but I'd say one of the two most overlooked risks by management, one, not having a dedicated role to the implementation. Sometimes the C-suite thinks that persons can fulfill their day-to-day tasks as well as the implementation. And this often leads to a lot of oversight, especially during that design stage, which is a really critical stage of the implementation. And this leads me to the second most overlooked item, which is rushing through that design stage. Most people just want to get to the system and the implementation. They just want to get to I guess the cool part. And there are a lot of key activities, roles, and functionalities that you want to really capture in that design stage, making sure that it meets your business needs as well as your customer needs, as well as your internal needs. So not giving yourself enough time here can lead to sort of a cookie cutter system being implemented, and your system's only as great as your process designed. So, I would say these are the two biggest risks and often most overlooked risks by CFOs.
This has been a fantastic conversation. I want to thank you both. And I have one more question to pose to you, Chelsea, and Kizzy, feel free to chime in on this as well. I want to talk or have you talk a little bit about integration and connectivity. Organizations grow and change through acquisitions, divestitures, business unit combinations, ERP system upgrades and implementations, as we've been talking about, and more. What are some of the steps finance groups need to take to keep pace with these changes, and where does automation and digital maturity fit into this?
These are absolutely hot topics we are seeing trending and have seen trend over the last several years. So acquisitions, divestitures, shared service centers, need for centralization, and really at the crux of that is the topic of integration, connectivity when it comes to financial data, ERPs. So this topic I've discussed at length with a number of different clients, which is as we are growing, how are we ensuring that our finance and accounting departments can keep up and not act as separate business units? Where are opportunities for centralization and standardization? And it first starts with data and processes within the technology. So what we're seeing right now is a lot of companies looking for opportunities with ERPs as they're going through acquisitions to say, are there opportunities for us to get on a single platform? Are there opportunities for data integration? And really, that is what they're looking for to gain efficiencies, centralized processes. So as we're seeing companies grow through these type of transactions, or their organizations are shifting to divest off certain businesses, the question really becomes, where do we have opportunities to grow and become scalable in an optimized finance process space?
Totally agree. Chelsea hit it spot on. The only thing I'd likely add is metrics and reporting, which I know we touched on earlier, that truly helps the organization to benchmark and kind of see where they need to make these upgrades or where they need to scale. So that would be the one key activity or area that I think finance groups can take to keep up to date with these changes, because metrics and benchmarking is going to truly help them see where they are against the industry, where they are against themselves from prior year, and where they need to get to their desired future targeted state.
My thanks to Chelsea and Kizzy for joining me today in this highly informative conversation. Several things really stood out for me. First, cloud is definitely the way to go and seems to be the future when it comes to finance organizations moving forward and becoming more digitally oriented. Second, digital mindset and digital maturity is not just about the technology tools, but it's about embracing that approach from the top down and having the people and the skills necessary to achieve that transformation long term. And as part of that, effective communication and an organizational commitment, again from the top down, is paramount. For more information on these topics, I encourage you to visit the Protiviti website. Among other resources, you can read our latest Global Finance Trends Survey, which includes views and perspectives from CFOs and finance leaders around the world. And finally, I encourage you to please subscribe to our Powerful Insights podcast series and review us wherever you get your podcast content.